Hi everyone, welcome to Argo's Aras. This is Rohit Srivastav. Today we're going to build a simple model using one of the indicators. Basically we're going to be using RSI, and we're also going to explore a few more functions such as optimize, XREM and stop losses. So let's begin. Click on analysis formula editor. The previous formula that we had built in the previous video, moving average crossover, let's just copy a few things from there. One is the price, then we'll also copy the shapes, arrows that we're going to be putting out there. Right. Now what we're going to do is that RSI is basically an indicator that shows overbought and oversold positions. So for example, if the RSI of the index is over 80, then it is supposed to be overbought, and if it is below 20, it is oversold. So it should be if the indicator is over 80, then it should become, the prices should be coming down, and if it is over less than 20, the prices should be going up from there. Now this is basically mean reversion model, and as I had stated earlier, mean reversion does not it has not really worked for me. So what I am going to do instead is going to use I'm going to use RSI as a breakout indicator, and we are going to be coding that. So let's begin. Buys. See, another thing I'd like to add is whenever you type in a code which ambibroker recognizes or is built into it that goes bold, such as, so for example, if I were to type long, it would not go bold, but since buy is an indicator, is a text that ambibroker recognizes, so that's why it goes bold. So buy is equal to RSI 15 greater than equal to, let's take 60, and let's close the line with a semicolon. Sell is equal to RSI 15 less than equal to, let's say, 40, and close it. Now our sell indicator is also going to be a short indicator for short, so sorry, let's put that here, short. And buy is also going to be an indicator for covering, so buy is equal to cover and sell is equal to short. All right, let's just apply this indicator. Now you'll see something unique happening out here. Is unlike the previous code where we had entered that were crossovers that were happening and there was only single buy and sell points, over here, since we have entered a value, so wherever, so from here we are entering into short positions, the RSI falls below 40, and there you go, you get a short on every candle. Now this is not what we are looking to do. We want a single short position to be there until it is covered, and a single buy position to be there until the sell signal comes in. So that's where the XREM function comes into play. You basically go to assign XREM to buy also. So here's the code for that. XREM buy comma sell, and sell is equal to XREM sell comma buy, and short is equal to XREM short comma cover, and cover is equal to XREM cover comma short. So what this basically does is that it will stop additional signals from coming in. So for example, if a buy has been executed, it will wait for a sell before another buy is executed, and a sell signal will not come into play unless there is a buy before that. So let's just apply this, and there we go. Now we've got the way the charts is actually supposed to appear. We've got a sell happening, a short happening out here, and then there is a cover and a buy, and then there is a short and a sell and a short, and so on. So let's just backtest it. We are backtesting it on Nifty tools backtest, and there it's visible in analysis. Let's just close the second analysis. And alright, we've got the trades going through. Let's click on report. So it gives a pretty decent return, CAGR of 18.86, total 706 trades over a pretty significant period of approximately 5 years, and a max drawdown of 12.46, CAR to max GD, CAGR to a max drawdown ratio of 1.51, which is alright, not too bad. Let's see how the equity chart appears. That's also quite decent. Drawdowns, equity underwater, and this is our monthly returns. Let's just check how this performs on Bank Nifty. We've got 18.71 annual return coming out there, pretty much similar to what was there in Nifty, and a max drawdown of 26.94%, which is quite significant. Okay, let's see the chart. Not as linear as the Nifty one, and again there are quite a few areas where the drawdown is quite significant. Let's just check in this why this is happening. So let's see what is the maximum loss that we made. Just sort this percentage profit, and we've got a maximum loss of 5.64. That's the maximum trade loss that is there, and we've got a lot of losses which are in excess of 2%. Now in trading, most of the times these kind of positions would not be held on. Stop losses would be executed. So let's build in a stop loss. Now the code for apply stop stop loss is apply stop. Sorry, there's too many P's out there. There we go. Apply stop, open bracket. Now I'm going to basically be using Google to I'm just going to Google apply stop, because I want all of you to be comfortable researching formulas and understanding about it, because with ambibroker a lot of times you've got to spend a lot of time researching the various formulas that are there and finding the right code for it. So let's just find out what apply stop is all about. So here's the code for it. Apply stop type. So what is the type? 0 is for a maximum stop loss. We are looking at a maximum stop loss at the moment and not trailing one. So let's go with 0, comma. Now we've got to give a mode. So what are the different kind of modes that are there? There's mode in percent, amount in points. So I want it in percent, so that would be 1. The amount, that is, I want a stop loss at 1. What is exit at stop? Exit intraday. Yes, I want to exit intraday and not at the end of the candle. So that's 1. Volatile is false, and re-entry delay 0. You don't need to enter codes beyond that. This much is sufficient. Basically, if you enter codes beyond that, then this formula would not work in previous versions of ambibroker, such as 5.64, the professional version that I have. So let's back test this now. Right, we've back tested in Bank Nifty. The returns have increased from 18 to 19.37. The chart is also looking better. Our drawdown, which was there of almost 20 or 25%, is now down to 21%. Right. Let's check it on Nifty also. How the stop loss is affected our returns on Nifty. So the returns on Nifty have gone down a little lower, but not too significantly. While trading, I like to trade not only with the maximum stop losses but also trailing, because this is basically a trend following model that we are having out here. And in trend following models, when the trend is coming to an end, all the returns that you have start reducing, as we'll see out here. If you just go into maximum favorable excursions, so we've got a 12 point, almost 13% return that was there, and what we ended up making on it was actually 7.43% only. So we lost almost 5%. Then there are going to be cases where your max excursion was quite significant, but despite that you're making a loss. So let's just search for that kind of occurrence. if that, oh, there we have it. So we had a 2.78 positive, and what we ended up making was actually a loss of 1.75%. See, again with stop losses, we have applied a stop loss of 1%, but since ours is a positional strategy, that means the trades are carried over to the next day. Applies the stop loss will not, I mean, if there is a gap up or a gap down, apply stop of 1% will be not hit, and we might exit at a higher stop loss, higher loss potential. For example, I'm sure we'll be having losses more than 1%. There we go. This 3.34 was in all probability because of a pretty high gap up that happened, gap up or gap down. So like I said, I like to trade with multiple stop losses. So let's build in another stop loss. This time we're going to have a trailing stop loss. Just copy it out here, copy, paste. And what is the code for trailing stop loss? The type we've got to do is 2. So let's just change that 0 to a 2 out here. The rest of the parameters remain the same, right? And let's back test it again. Let's see what happened. So the returns are actually down further because of this, and for all the trailing stop loss that we put. And Bank Nifty, it's down to 12%. That's because we have not changed the trailing stop loss. We would want a longer, a highest trailing stop loss of around, I usually keep a stop loss of 2.5%. So let's check it now. And there you go, the returns would be much better now. The chart is also looking much better, more linear. The drawdown is down from 22% to 18%, and that's just one. The others are well around, lower than 12%. On Nifty, again the returns are quite decent. 17% is the CAGR. The chart looks good. The drawdown is a little over 10%. So this is a basic model that we have created. Now suppose we wanted to basically find out the most optimum values to be put here. For example, 60 and 40 is what I started off with on a basic simple logic, that RSI, when the RSI goes over 60, it's a breakout which is happening, and when it goes below 40, it's another breakout which is happening for shorting the stock. So let's just find out what are the optimum values that are there. You can do that with the optimize function, and this is how you do it. You first have to define an array. So let's do that. RSI long is going to be our buy array. So the function is optimize, open bracket. You've got to give a name out here, RSI long. It's supposed to be in inverted commas. The default value is the one that we're using right now, that's 60. What is the minimum that we wanted to search from? Let's say I wanted to do search it from 50, and the highest value that I want to search it to is 80, and I want the incremental values to be in multiples of 1. Then RSI short is the other array that we are defining. Optimize, the name, RSI short. The default value is 40, and the minimum value that I'm looking for it to do it from is, let's say, 15, and highest is up to 45 in multiples of 1, step 1, right? And then over here we changed it from values to the array that we have defined. That's RSI long and RSI short, right? Let's just check it if everything's all right. Now we just click on tools and optimization. So this is going to basically require 961 steps. So let's just do that. In your analysis, you'll start getting the various combinations. If you go on the rightmost side, you'll find the names that you had given. That was RSI long and RSI short, and you can see that the variables are going on changing, and it's going to take a bit of time. We've got another 1 minute to go, so it's done now. And as you can see, we've got various figures. Maybe we'll have 99 over almost 1,000 various combinations that we've come up with, and these are the various headings on which you can sort. So you've got the CAGR, so the best CAGR, the various optimization factors give us around almost 25%. These are on a value of 56 and 37. Then we can also take it on the lowest system drawdown, which is 5.73. We had a very small CAGR on that. Or what I like to do, the optimization was which the fraction. I mean, what I like to do it on most is CAR by MDD. This ratio, which is the highest ratio, so we've got 1.95, and this is at 56 and 41, and on this we get a CAGR of 22.78, and so on and so forth. So let's just change these values to the best optimized value that is there, that is 56 and 41. Edit. You can change the default values that were there, 56 and 41, and we'll just open a new analysis chart so that our optimization figures do not get lost. And we'll be backtesting in this backtest, and there we go. So we're having 22.78, a max drawdown of 11.6, so we've almost got a CAR to MDD ratio of 2. This is the chart. That's a phenomenal looking chart. We've got no years of negative returns. That's not so bad, but one should be very careful while using optimization, because over optimization leads to curve fitting, which basically means that while historically your model might look brilliant, but there are very little chances of it surviving the future or the real market conditions. So let's just see what would have happened if we had traded this on Bank Nifty, the same values, and there you go. I mean, our returns have fallen. The charts doesn't look that great as it was looking earlier. Our drawdowns have increased. So whenever you create a model, be very wary of the fact that you might be curve fitting the model by optimizing it way too much. It's better to rely on logic and just use the optimization function to find out whether your model is robust or not, rather than looking to just find the best parameters, because there are no best parameters, because we do not know what the future holds, and markets don't really move in a single line following the same parameters. So let's just save this file. Save as computer. I'm saving all of these codes to be used in future videos. These are RSI buy and sell, and let's just go back to the original figures of 60 and 40. So this is it. This is how you can basically build some models using the various indicators that are there. Not too complicated. You can try building such a model, buy and sell indicators, using indicators such as ADX, because this also gives you buy and sell when the PDI crosses over the negative minus DI, the directional index that is there. Then you can also use this buy and sell for random walk index. This also gives you buy and sell indicators. So that's about it for today's video. We basically covered the XREM function that is there, optimization and apply stop and we are going to be using this in our future models as we look to build some more complicated models and using different indicators and different methodologies. So I hope you understood the basics of how to set up this indicator and how to set up these codes. Thanks for watching. I'll see you next time.